Your bank is not your friend. I know that sounds harsh, but stick with me for the next 10 minutes because I'm about to show you something most people never notice. Banks make tiny design choices, the order of buttons in their app, the default settings on your account, the way they word their fee policy, and every single one of those choices is built to make them money off you. Not a lot from one person, but multiplied across millions of accounts. Billions of dollars a year. Today I'm giving you 4 simple switches that flip the system back in your favor. Number 3 alone can save the average person over $300 a year, and you can do it before this video ends. Let's get into it. Let's talk about where most of that money leaks out, because you can't fix a problem you can't see. First up, overdraft fees. This is the classic one. You spend $32 more than what's in your account, and the bank doesn't stop the transaction. It lets it go through, then slaps you with a $35 fee for the privilege. That's not a mistake. That's a business model. Some banks pull in billions of dollars a year just from overdraft fees alone. And here's the sneaky part. Many banks used to reorder your transactions, processing the biggest one first, so you'd overdraft on more purchases and rack up more fees in a single day. Regulators cracked down on some of this, but the core trap is still very much alive. Second, low interest on your savings. This one's quieter, but it adds up just as much. The average savings account at a big traditional bank pays you next to nothing. We're talking a fraction of 1%. Meanwhile, that same bank turns around and lends your money out, or invests it, earning way more than what they're paying you. So, your money is working hard. It's just not working for you. If you've got $5,000 sitting in a low-interest account, you could be missing out on over $200 a year in interest you're simply not being paid. Third, and this one catches people off guard, minimum balance fees. Dip below a certain amount, sometimes $500, sometimes even more, and boom, a monthly fee kicks in automatically. It doesn't matter if you dipped below that line for one day or the whole month. The fee doesn't care about your reasons. None of this is illegal. None of it is even hidden, really. It's usually sitting right there in the terms and conditions. But banks are counting on the fact that you won't read 40 pages of fine print, and you won't reorganize your entire banking setup just to avoid a fee here and there. That's exactly what we're going to fix right now. Switch number 1, move to a fee-free account. Over the last several years, a wave of online-first banks and credit unions have popped up specifically because they don't carry the overhead of physical branches. No rent on 50 locations. No small army of tellers. That means they can pass the savings to you in the form of 0 monthly fees, 0 minimum balance requirements, and in a lot of cases, no overdraft fees at all. Here's what to look for when you're comparing. You want an account with no monthly maintenance fee, no minimum balance requirement, and reimbursement for ATM fees, or at least a big network of free ATMs. Some of these accounts even have a small buffer built in, so if you accidentally overdraw by a small amount, they just cover it instead of charging you. Quick gut check. Pull up your last 3 bank statements right now, or do it right after this video, and add up every fee you were charged. Monthly fees, overdraft charges, ATM fees, all of it. Most people are shocked when they see the number. If you're paying anywhere from $10 to $35 a month just to keep your money in a bank, that's up to $400 a year gone for absolutely nothing in return. Switch number 2, set up an auto sweep. This is one of the most underused tools in personal finance, and it takes about 5 minutes to set up. An auto sweep automatically moves money above a certain threshold from your checking account into a higher interest savings account or investment account, usually on a set schedule, weekly or monthly. Here's why this matters. Most checking accounts pay you basically nothing in interest. But if you're consistently keeping, say, $3,000 sitting in checking just because that's where your paycheck lands, that money is doing nothing for you. An auto sweep says, keep $500 as a buffer for daily spending, and anything above that gets automatically moved into an account that's actually paying you a real interest rate, sometimes 10, 20, even 40 times more than a standard checking account. The beauty of this is that it's automatic. You're not manually transferring money every week and forgetting half the time. You set the rule once, and your money starts working in the background without you thinking about it again. Depending on your balance, this one switch alone can add up to a meaningful chunk of extra interest over the course of a year. Money you were leaving on the table simply because your checking and savings accounts weren't talking to each other. Switch number 3, and this is the one I promised you at the start, so pay close attention. If you have a mortgage, a car loan, or really any big loan with monthly payments, switching to bi-weekly payments instead of monthly can save you a serious amount of money over time. Here's the math, and it's simpler than it sounds. If you pay monthly, you make 12 payments a year. If you switch to paying half your monthly amount every 2 weeks instead, you end up making 26 half payments a year, which works out to 13 full payments instead of 12. That's one extra full payment every single year, and you barely notice it because it's broken into smaller pieces. That one extra payment goes straight toward your principal, the actual amount you borrowed, not the interest. And because loans are structured so that interest is calculated on your remaining balance, chipping away at that principal faster means less interest accumulates over the life of the loan. On a typical mortgage, this single switch can shave years off your loan and save you tens of thousands of dollars in interest over the full term, depending on your loan size and rate. The best part? Most lenders let you set this up directly through their website or by calling customer service, and there's often no cost to switch. Just make sure, and this part is important, that you confirm with your lender that they apply the extra payment to your principal and not just hold it and apply it as one lump monthly payment. That one phone call to double check can be the difference between actually saving money and just moving your payment date around. Switch number 4. Turn on free credit monitoring. Your credit score affects almost everything. The interest rate on your next car loan, whether you get approved for an apartment, even some job applications. And yet most people have no idea what's actually on their credit report until something goes wrong. Free credit monitoring services will alert you the moment something changes on your report. A new account opened in your name, a sudden score drop, a late payment reported by mistake. Catching an error early means you can dispute it before it drags your score down for months. Catching fraud early means you can shut it down before someone racks up debt in your name. Most major credit bureaus and a lot of banking apps now offer this completely free. It takes about 3 minutes to set up, and then it just runs quietly in the background, watching your back so you don't have to check manually every week. So, let's bring this all together with something you can actually do right now before you close this video. Pick one of these 4 switches, just one, and do it today. If you want the fastest win, open your banking app right now and check for 2 things: your current monthly fees and your savings account interest rate. Those 2 numbers alone will tell you whether you're in a fee-free account or not, and whether an auto sweep makes sense for you. If you've got a mortgage or car loan, call your lender this week and ask 2 questions. Can I switch to biweekly payments? And will the extra payment go toward my principal? Write those 2 questions down if you need to. And if you haven't already, turn on free credit monitoring today. It costs nothing and takes 3 minutes. None of these 4 switches require you to earn more money. They just require you to stop leaving money on the table through settings and defaults that were never designed with you in mind. I'll drop links in the description to some trusted comparison tools so you can see exactly which fee-free accounts and high-interest savings accounts are available right now. If this helped you see your bank a little differently, hit subscribe because next week I'm breaking down the 5 credit card habits that quietly wreck your score and how to flip those too. See you in the next one.